Wow. Well, Walt Disney is known for entertainment, and tonight was no exception. Now, I'm going to save the most important part till last. So, if you can't be bothered to watch the whole video, then just skip to the end, because that's the most important part. Now, the top line is that rather than the expected loss of 64 cents per share, Disney reported a profit of 8 cents a share, excluding certain items affecting comparability. Now, revenue fell 42% down to 11.78 billion, which was a miss of about 600 million compared to the expected 12.37 billion. But hey, what's 600 million between friends, hey? These two are really important because although revenue was lower than expected, that profit figure shows that Disney's been able to minimise costs as much as possible and still eke out a profit. Other key figures are that media segment, which is TV, reported a growth of 48% in operating income, which was up to 3.15 billion, while the studio entertainment, which is films, operating income fell 16% down to 668 million. But now for the most important, and this is the key growth area for Disney, the direct-to-consumer and international segment. This segment only saw an increase in revenue by 2%, which was up to $4 billion. It also saw a much bigger operating loss of 706 million compared to 562 million in Q3 last year. And this loss was caused due to increased investment in Disney+. Now remember that this segment is losing customers and revenue from standard TV as it pulls its channels from TV packages like the UK Sky TV to force customers over to Disney+. So in the short term, we're likely to see a very slow revenue growth. But over the long term, we should see a maximum profit gain. It was also noted that ESPN Plus saw some great gains from its recent rights deal with the Ultimate Fighting Championship pay-per-view, while Disney Plus has now, or since Monday, surpassed 60.5 million subscribers. How about that for some growth? Now on top of this, Disney also announced that Mulan will be available to rent via Disney Plus for $30 on the 40th of September. I think it's $29.99, but I mean... Now, unfortunately, this isn't going to be in the UK from what I could tell. It just seems to be selected other countries and a little bit in Europe as well. This was described as a one-time thing, and I think it's very important that Disney keep that perception because they don't really want to annoy the cinemas at this stage. However, if it's successful, it could pave the way for a similar premium cinema style package where Disney could cut out the cinema completely and continue with a direct-to-consumer offering that could make them far more money. Okay, so imagine if they could make a similar revenue from sending the films direct to customers rather than going through cinemas. The amount of extra profit that Disney would make from that could be phenomenal. And then there's the bit that's, to me, was the most exciting, and this was actually a complete side note from Disney. This to me is quite a key component and something that I've been waiting for, and it's an announcement that in the fiscal year 2021, integrated with Disney Plus for international markets, there will be a new streaming service under the brand Star, and that will feature content from ABC, Fox, FX, Freeform, 20th Century Studio and Searchlight. To me, that is what Disney needed to knock Netflix out of the park. If international subscribers now have more content aimed at adults, Disney could quite easily replace Netflix as the main family subscription. Netflix is still going to be there, but Disney's going to be king. Because of this, I don't think it's going to be long before we get back to the price of $150. I even think that we could be at 200 at some point next year. Let me know your thoughts. What do you think is going to happen with Disney? And if you're new to this channel and you've only just found this video, please make sure to check out my description below for more information about me. Subscribe to this channel. It's a new channel just starting off. There'll be a lot more content coming soon. See you in my next video.